moving everything, move the rowings. Yeah, here we go. So for today analysis, we'll be studying on the grid between pounds, United States dollar, that is the GBPUSD, and just give a major analysis uh, from the monthly. If you look at the monthly overall, this guy is bearish, right? This guy is bearish because we've got the first break of a low, okay, and then we've got a second break of another low. Got two breaks, and if we go based on past price action, see that this thing has been bearish throughout the month. Comes back to a particular area of interest, and then what? It comes back to retest just like that, and that's how it goes. So you could see there's every possibility, or there's a major possibility price is gonna seek for this low. Okay? Is gonna seek for this. There's a possibility that price is gonna that low right there. So remember, when we have come, or when we have attained equilibrium, okay, when price has attained equilibrium, then the market can go in the direction, okay, pullbacks or retracements once it has gone above or below equilibrium, depending on the structure at the moment. If it's bearish and then we're having a bullish retracement, it should come at least above the 50%. And if we use the Fibonacci, here's what we've got. We've got the 0.382 level mitigated, but then the 0.236 level is unmitigated. So I started giving reactions here. Okay, and let me go down to the weekly. So you'd see something here. The market has been in a bullish momentum forever, okay, and then suddenly there's this breakout, and then the buys stopped happening, and we started having sells. So first of all, the minor structure broke here. Minor structure broke here, and the major structure here, because there's every possibility, okay, the market would have done something like this, clear this low, you got down here, something here, and then continue upwards. But then going ahead to break this low was a sign that, okay, we are done with the bullishness, and now we are bearish. Price gave a retracement. Okay, price gave a retracement. Let's see how far the retracement went. Let's use the Fibonacci, of course. Let's see how it retraced. So it retraced to 0.382 level, right? It retraced to 0.382 level, and we started having rejections on the daily. Okay, point of concentration should be the candle that swept liquidity. Now here is the liquidity here. This is the high. Okay, and this candle swept this whole high, and after it swept the high, no other candle went above that candle. We started having the sales, okay, after this peak. So this whole candle itself is a POI. Alright, the whole candle that swept the liquidity on this side is the POI. So what we want to see is what is a bearish sign, right? A bearish formation on a lower time frame, right? That's what we want to see. So we go to the daily time frame. Okay, the daily time frame. So hit the daily time frame right in there. We've got that break. Now you can see here. Now this is a line chart. This is the candle you'd see the break. Mind you, why we took this one here was a strong low, because it came up here and it swept this low. It swept the whole high. We are thinking price was gonna come here and pull back buys, but then price broke the body candle, meaning what? Meaning the sellers are now in control of the market. So when we had this closure below this guy, we knew the sellers were in the market. And if we had gone on the 4 hour, here is where the liquidity is, or the inducement. you could see the bunch of liquidity. It formed all these highs, and then what is swept the highs and will continue selling and give the second break of. All right, this is the second break of structure it gave. Okay, and then what? It started pulling back again, pulled back to where? This major region. Now the tricky thing about price is it comes back to origin. GBPUSD most times it loves to come back to origin at least twice. So if you miss the first and the second, if you're not careful, you may miss the whole move. If you don't get in the second entry, you may be liable to miss the whole move, because that's where it can get tricky. Now you see price came here, and of course we don't want to get in on the first one because of course there was no something we could think about. But some people would see this. Okay, some people would see this here. All right, and then look at the liquidity. Just put your entry above that. Okay, now this is valid. It's valid. But then we had a sell right above this level. We had a sell just right above it, off nothing, and had area of validation. Of course, here is the major area of validation, but then we here because there is another POI here. Okay, there's another POI, another point of interest right here. So this would have been another entry. So invalidation was just right around this level. So price started pushing back upwards again, and we had this high mitigated, but then price danced around, came here, and this was confusing, took out so many people. Imagine how many, almost a week, and price have been doing this. This is like Tuesday to Thursday of the next week. That's almost 2 weeks, almost 2 price action, just messing around. Entry, imagine who entered here, okay, on this POI, and you entered here, and then look what price is doing to you as a trader. Okay, you entered here and you're selling, then it sells up to this level close to TP, but then rejects and just pushes, gives this daily bullish close. Wouldn't you be scared of closing your positions? But if you understand the higher time frame narrative, okay, you won't be in a rush to close your position. Why? Because of this is a higher time frame trade, right? This is a higher time frame POI, a higher time frame level. So what it does on this time frame, on the lower time frame or on the daily, it's not too necessary compared to what the bigger picture shows. So now we've had this second, third, yeah, this is like first break drop. This is the second. So remember I said it gives two GBPUSD usually gives opportunities to enter from RTO, as in 2 opportunities to RTO rather. Okay, so meaning we had the first one here, and this is the second RTO to origin. Meaning, if you took a sell here and you just think price just keep selling, no, comes back again close to this, like take out inducement, come close to the entry again, just like that. This is how it does. So meaning if price rejects from here now, we would not be having price around this region anymore. Just be seeing heavy bearish candles just like this. Now this is an example of what I was saying. So look here, change of character here with the body candle, and of course inducements, and then this whole area is a point of interest here. Okay, and then look what price did. Of course, engineer liquidity and what into this level. This is the first entry, right? And then we had the break. After, remember I said return to origin, right? We had the break of structure right there, and then look how it came to the second level again. Came to the second level. This is the second, right? And that's how. Okay, this is the break. So you see the first one here and the second one here, and now look what it did. Next one is just break and retest, all those things. So you barely get a return to origin anymore after 2 times. Okay, so this is like the retracement, and of course it should be any of these liquidity levels, right? So now the sales are in, we are coming to take out all these lows. Right, we're coming to clear all these lows. The job of the buyers has been done, and then we are now having sellers. Okay, so hopefully price, because of this weekly reaction here, of the weekly reaction on this POI, all right, we should be heading to, this is a weekly support. Okay, so we should be heading to where the weekly resistance, and where is that weekly resistance? Right here on the open and close level of this, the last week and the last 2 weeks. So it's more like on the close of the last 2 week candle and the open of last week candle. So anything from above this level, that's where we should be expecting the sales from. Okay, so if you're making refinements, although I see nothing much here, but then you see this high here is valid, may be valid, and can be valid. Okay, this is a valid level. All right, and on the 4 hour, do you see anything here except this level that got violated twice? Levels that get violated twice have, you know, low probability of reacting. Okay, low probability of reacting. So you should be expecting 2 entries. Okay, because this is like an return to origin, and of which I told you guys that I don't think this would happen. I don't think a return to origin will happen because it has happened like twice. Even if it's a reaction from this level, you know, so many people will not see anything there, but looking from the daily time frame, you could see where we got this. Sorry, from the weekly time frame, you could see where we got this entry from, right? So now there are 2 entries. One at just the open of the week, as in one close to the open and close level, and one above the 50%. What should we do if in this case? Of course, this is yeah, this one is, and we can have something like this. Sorry. First, we check out the 50%. All right, we want to make sure that we're not getting in. We're not having much SL. So this is like 50%. So our SL should be like 30 pips. The 30 pips concerning considering the direction of the trade we are about taking. 30 pips is fair. Okay, then we should be targeting these lows, right? These lows, or if you want to be conservative to your weekly to weekly, and just want to do your weekly to weekly and in daily to daily beats and stuff like that, we're looking at this one first. Probably when price comes here, there are other levels to watch out for, levels like this open and close level. So these are the levels to watch out for. All right, this one might even hold for a pullback. Okay, remember it's on the weekly. So all these are levels that possibly can move price once you're never triggered. So all these are valid. Okay, here too, but I usually put them together. Okay, so these are the only valid levels on the weekly. So meaning once it hits here and keeps selling, these are areas where we expect what? Backs from. Right, we expect pullbacks from. Understand the vibe? The pullbacks from. So if the pullback, if none of this level holds for a pullback and we don't get a lower time frame confirmation to take the pullback trade, nice. Just stay out and we just delete this. Okay, and then wait for the next level. All right. But any level that has inducement, okay, or just a week or something like that hanging or right on top in this case scenario is usually strong. That's why I vouch for this one and this one. Any of these ones will play out, all right, and they'll be very, you know, very volatile, also especially because of this low. But if you get a nice closure, you can have a break and a test. Okay, like a break of this low and then a retest to this level. All right, there are possibilities, but then I don't think that will happen anymore. Anything that pushes price from this level, take price down to this level. Yeah, but then I don't want to start predicting far in price, and I don't want to go that far. So let's just stick to the next week's bias. Okay, we'll stick to the new week's bias and what we expect for the week. So the analysis is pre-CPI. All right, pre-CPI, if we have price still in these levels, still in this range, okay, then we can take buys. Now the buys should be from where to where. We take the buys for CPI, and the buys for CPI should be the profits should be taken off at this blue line, the first one, and then we'll get prepared to take our first sell. All right, take our first sell with the 30 pip SL, and wait, if it reacts, good. If it doesn't react, if it goes up to clear this one, then we have a second trade, which is a higher probability trade with same 30 pips SL, right? Same 30 pips SL, and then of course target the lower supports. Okay, you target the lower support. As simple as that. Once we then we wait. Of course, once price gets here, take out like 80% of our positions. All right, then and hold up. If we get a reaction, good. If we don't get a reaction, price keeps stalling, no problem. Then we'll definitely get a reaction from the next level below. If we don't get any reaction from these guys, just hold your sells continually and keep looking out for these levels. Okay, now the confidence in this your sell is you always set your resistances. Okay, like this is the resistance, the only resistance that is close. So we have this one, but then this one not even, there's probability may not even come, may not come. All right, so if this decides to hold, meaning it has to use here as liquidity, I don't think that will happen, but it doesn't mean it can't happen. Okay, so I think I should add this to the list. So that's why when you risk, this one has a same 30 pips SL. Oh, okay, same 30 pips SL and same targets. Price would not go above here. Above here. If it goes above here, structure is in the mud. So yeah, this is what we do. We go in for the buys. All right, going for the buys. Well, next week candle opens to come down here. All right, once it comes down to this level, then we may start having buy continue, and then watch out for these levels. Pre-CPI. CPI is on Tuesday. Pay attention to price action, and hopefully we'll get a live session for CPI. Yeah, have a live trade on CPI or CPI live. And yo, that's all for the weekend, guys. Have a nice trading week ahead.